We now move to a topic that's making waves across APAC. Our next panel brings together experts who live and breathe stablecoins, a space evolving faster than ever. So let's get ready for sharp insights, real-world perspectives, and a candid look at where the market is headed next. Now, please join me in giving a warm welcome to our moderator, Paul Durham, Managing Partner at Holly Nethercote, who will introduce this exceptional lineup of speakers to us.
Hi, everyone. Thanks for coming, for those of you that are in the room, and thanks for watching, for those of you that are watching online. My name's Paul. The reason why I've been asked to moderate might be because I represent a law firm in Australia that represents a lot of the industry dealing with stablecoins and traditional finance. Our firm also were authors of the Commonwealth's Model Law, co-authors of the Commonwealth's Model Law for virtual assets, which is being rolled out in 33 countries, and we're just about to roll out the stablecoin model law for the same Commonwealth members. So do a lot of work in that space, and also I represent the industry body in Australia as chair of its board of the Digital Economy Council of Australia. So check out the website if you want to get involved in the ecosystem in Australia. But today's session is about the three experts on this panel. And so we're talking about stablecoins. Everyone's talking about stablecoins. And so let's go a little bit deeper into some of these topics. So I guess to sort of help you think about the different lenses through which this panel is going to talk about stablecoins, we've got Kailesh, your business. I'll let you introduce your business, but the payments side of things, connecting Web3 with traditional rails and vice versa globally with a lot of very large institutional global clients. We've got Edwin. He represents, I guess, the exchange lens, operating a big global exchange, which is Gate, particularly the OTC desk and the CEO of Gate Dubai. And we've got Esme as well. And Esme is looking through, I guess her business is in the security side of things, but Esme's expertise, you might have seen her on Bloomberg. She is a highly sought after speaker to talk about some of the technical aspects of the topics we're talking about today, but also has a background in government policy and regulatory compliance. So we've got three different lenses that we'll be thinking about stablecoins today, but I think for us to really understand the panel, let's talk about why we're here. So the first question that I've got for each of you is, why are you interested in talking about stablecoins? So Kailesh, do you want to go first?
Yeah, of course. Thanks so much, Paul, for having me here, and lovely to be back in IFX, this time in Hong Kong. As Paul said, I'm Kailesh. And how I got into the stablecoin space is pretty interesting. So I started my career at Citi, so as traditional as it can get. I was doing trade financing for importers, exporters. So think of working capital, term financing to move money across borders. Then I realized fintech is the space to be. So I made the switch to Stripe, where I spent a few years serving online digital native businesses and allowed them to accept payments from a growing array of consumers who had access to credit cards and some alternate payment options. Then I moved more to the SaaS layer to aggregate a lot of these sources as complexity increased. Earlier this year, as I look back on my career and I was like, what should I be doing next? It felt like there needed to be something which connected the traditional way of money movement along with the digital way of money movement. And what was that technology that could do this in a faster and more efficient manner? And to me, looking at everything that was happening, it was pretty obvious it was stablecoins. The licensing framework at this point in time was extremely supportive with the Genius Act in the US. A lot of markets becoming more black and white in terms of what can be done, what can't be done, which provided clarity to businesses. So for me, it became a no-brainer. This is why I wanted to be in the stablecoin space. So far, so good. I think there are a lot of tailwinds in this industry, and can't wait to dive deeper into these topics and see what we can contribute.
Thanks. Edwin, how about you?
Yeah, similar to Kailesh, I was from banking, Standard Chartered Bank, working there. Obviously, right now, Standard Chartered, back then we were also discussing about, how fintech works, what is stable coins, and after that, I moved to, at Gate, which is a crypto exchange. We look into different avenues, why stable coins are common hot topic. One obviously is about trading pairs, enhancing the liquidity in the crypto market. But what's more important that these days, why we're talking a lot more stable coins is that we wanted to bridge the Web2 users to Web3. And what we see, the fascinating part is that, stable coins not only about trading, but also about, making payments, cross-border payments, corporate to corporates, getting rid of SWIFT or, having a different options to make the seamless cross-border options. And lately, what I've been working on, in addition to cross-border payments, is about how to do wealth management or enhancing your capital using stable coins. By adopting the stable coins, you essentially at the back, you're earning U.S. Treasuries or other returns, which is a safe and safe and secure in this way. So a lot of stuff happening around the stable coins, similar to what Kailash was mentioning about with the U.S. Genesis Act or even Hong Kong, talking about a lot more on the stable coins. These are black and white and very driving the institution adoption, which is an important factor, a key factor this year that drives this hot topic.
Thank you. So both of you, in your own ways, have identified this trend where there is insane amount of opportunity, and you're leveraging your traditional finance backgrounds into this new sort of ecosystem, and you're both at the centre of providing services to that, which I'll get to soon. Next question. But Esme, how about you? Why are you here? Why do you want to talk about stablecoins?
Yeah, first of all, thanks for having me here. It's a pleasure to address the audience. So for my background, I'm mostly from an investment background. And from that point, I mostly invest in disruptive technologies. And then the keyword for us as investors will be alpha. So where's the next round of alpha, right? And then when it comes to disruptive technology, obviously the hardest word will be AI and also, digital assets or stable coins. And for stable coins, I think the best investment idea is the intersection between a macro perspective and a micro perspective. So let's talk about macro. And then macro, obviously, I've been looking at digital assets investment since 2016. We went through different rounds like the ICO boom. And then afterwards, there was the usual bear trough cycle. And then afterwards, there's a GameFi hype. There's like the DeFi summer. And then what I experienced about stable coins is that it's more sustainable as a rally. And the reason for that is, number one, it has the regulatory blessing, as my fellow panelists mentioned about Genius Act in the US, and obviously Hong Kong, and also in EU, there's MiCA, and I think FCA in the UK is also coming up with another regulatory parameter coming up. And the second thing would be in terms of what the stakeholders are doing, right? So in every significant shift in disruptive technology, what I expect is that we saw like IPOs like Circle. So I've been an equity analyst, and then Circle IPO was huge. And then I think up and coming, there's going to be more of these like distributors/issuers coming up. So that is the reason why I am very fascinated by this field.
Thanks, Esme. We may stay with you while you're talking, and tell us how does your business CertiK, is that how you say it? How does CertiK help the audience? So we've got people in this room and people wandering around the expo. They're really looking for people to help them grow their business, help them widen their network. So how can your business help? CertiK.
Right. So CertiK, to start with, is the largest smart contract auditor. So one word would be security. But at the same time, I think what is magical about us is that we also work closely with the regulators. And based on my previous comment, so the joke in this industry is that we don't really need an investment analyst for digital assets. What we need is a regulatory analyst, because the future direction of where the alpha is basically what the regulators are blessing us with, right? So therefore, for CertiK, what we do is we also work closely with the regulators to advise them on the security standards that we need for blockchain. And just one additional point for why security matters for stablecoins and also for blockchain. So I think our previous panelists also mentioned that security and also stablecoins is about unlocking the underbanked population. But what needs to happen is that no value will be funneled off by some bad actors due to security vulnerability, and therefore that's what CertX steps in. We make sure that all the code is flawless and it wouldn't be susceptible to any penetration before they goes live, and therefore along with the regulators we protect all the stakeholders, including the customers and also with the institutions.
Thank you. So CertX is providing this core function, and I doing some research before this panel, looking at the businesses that you provide that service to. It's really the biggest and the best, providing this sort of security sign off that they meet certain requirements or their smart contracts are at a certain standard. And I think that is exactly what we need to solve some of the big problems that stablecoins are going to solve. So thanks for explaining.
Thank you for the recognition.
Yeah, well, no worries. All right, well, Edwin, how about you? OTC desk. There's a lot of OTC desks in different industry. Well, in the wider FX industry in this big expo. But what about you? Tell us more.
Yeah, I think my view is kind of beyond OTC. So, we, as a crypto exchange platform, why we are working with stablecoins, similar to other leading exchange, what we see is that now there are not just US dollar backed stablecoins. There could be a lot other, currencies, local currency stablecoins. What that helps is that, that boosts the raise the awareness, having the local community to be a lot more easier to on-ramp, getting access to the crypto community. So that's what, as a global exchange, we wanted to work with a lot of different stable coins issuers in different, countries or locations, so that the payment railways make it a lot more seamless. That's number one. And the other part is that, as earlier I was mentioning, the trading pairs are enhancing the liquidity. These days, not just USDT or USDC, in the market, we have started seeing, a lot other stable coins like Paxos, USDG, or even other, FDUSD in Hong Kong. These names, what they are doing essentially is that they also want to beat the liquidity, to get the enhance the liquidity in the different trading avenues. So this is why if the better the liquidity, that actually helps to get more adoption in that particular stablecoin. So this is why we as an exchange, we work with the stablecoin issuers hand in hand to do this kind of marketing campaigns and also boosting the liquidity.
Oh, yeah. Thanks for explaining that. So I guess for an emerging stablecoin issuer to flourish, they need to achieve network effect, don't they? Which means getting that liquidity globally. And so it sounds like you're here to help those emerging issuers, not just the big guys, to actually get that liquidity. Interestingly, in Australia, there's now 2 issuers of stablecoins, and there's probably going to be about 5 by the end of the year, I reckon, or 4. And they all need that network effect. They all need the exchanges to help them along. And then other industries are waiting for this to happen, like the tokenization of real-world asset industry. It can only work with local, domestic, fiat-backed stablecoins to plug into these software platforms to allow for the seamless tokenization and liquidity to take place. So what you're doing, more exchanges need to be doing that, and they need to have a really like a global mindset in trying to help everyone provide liquidity. So good on you for doing that. So Kailesh, tell us more. So we've talked about security, we've talked about exchange and liquidity, and now let's talk about global payment rails. How can you help?
Yeah, thanks to my fellow panelists. Having built the compliance and regulatory rail, as well as increasing crypto adoption with consumers by giving them access to crypto, we come in at AAA to provide the transaction banking layer for stablecoins. So if you are a business who wants to engage with consumers and you want to accept stablecoin payments with that consumer, we provide an easy interface for that to happen. Not just that, if you want to pay out to your folks in stablecoins, we provide that platform as well. So we do the transaction layer for someone who owns stablecoins to be able to spend that stablecoin. So that completes the economic cycle. Gate, for instance, you mentioned that you allow users to on-ramp and get access to stablecoins. You think of AAA as providing the platform to be able to spend and deploy that stablecoin. Talking about the macro, which you touched upon, Esme, I think that's a very important subject. I just read an article which said the actual user-initiated flows of stablecoin today is about 9 trillion, which is 5x of PayPal, about half of that of Visa, right? These are huge, mind-boggling numbers. So we need to find a way to ensure that this circulation happens, and users of stablecoins actually have a way to deploy those funds, and that's where AAA comes in. So if you're a brokerage, you want to allow deposits in stablecoins for them to buy underlying assets, which may be real world or digitized tokens. We facilitate that. And if you want to allow them to withdraw to their stablecoin wallet, we allow that as well. We're also seeing increasing use cases of PSPs using us for their liquidity needs or internal treasury needs. So getting access to certain currencies in certain corridors where traditional banking rails may be a little more expensive or maybe a little more slow. Think about 100 million in float for 2 days by using a rail that's a little more efficient. That's where stablecoin also comes in. So the use cases are plenty, and I think just the way to see it is an end user has access to stablecoin. How can you let them transact with that stablecoin? That's where AAA comes in.
And the spread on those transactions, often less than 100 basis points. We were talking about this before.
Yeah, often less than 100 basis points.
That's
settlement
a bit better than Stripe, isn't it? Which is one of your former employers. I know that because my business uses it, and that's a lot more than that. So they offer other services as well, but that's very competitive, what you just described.
Yeah, 100%. Very low spread, instant settlement, no risk of chargeback, a secure way of doing transaction, and fully traceable on the blockchain. So along with other tools that exist, it makes it very compelling.
Okay, so you started talking about use cases, and this is what I want us to talk about now. Hopefully those people in the room watching and people watching online, it can help you maybe think a little bit more widely about some of these use cases. So you started off, Kailash, by saying internal treasury function. I think we were also talking about sort of mass payments to help your clients maybe pay employees, pay the end user, because you're obviously B2B. What are some of the emerging use cases that you're seeing in stablecoin?
Yeah, emerging and slightly surprising to me was extremely traditional businesses. Think of a Pepsi or a Coca-Cola trying to bring in optimization into their account receivable stack, right? They have distributors in markets like Nigeria or Egypt or South Africa where they find it hard to accept payments from these distributors. They are looking at technologies like stablecoins, and these are pretty mind-boggling use cases to me, because you would imagine the people who would be more prone to transact with digital assets would be the digital native, slightly trendier customers, but these are traditional businesses who are looking at stablecoin to improve their account receivable process and eventually maybe relook at how they offer credit to their customers or relook at what kind of currencies they deal with. So these are very strong use cases. The other one is on the topic of financial inclusion to the underbanked, right? We are looking at providers who are trying to find ways to have a form factor where you can just withdraw funds by using your stablecoin balance, right? Think of you go to an ATM in the Philippines, you scan your wallet address, you deposit funds to that form factor in stablecoins, and then you get Filipino peso. Pretty cool, right? These are people who may not even have a bank account. Of course, they need to be onboarded by an exchange locally in the Philippines. But access to local currency is also being seeing real-world use cases using stablecoins.
I think that message needs to get out there, because there is this stigma about crypto ATMs that is, there might be a politician in a country they want to make a mark for themselves protecting consumers. Let's just make them illegal in our country. There is such a bigger story to those sort of like physical exchange mechanisms. And so I think that's a really good point, and I'm taking that off on a bit of a tangent, but thanks for that. Okay, Edwin, how about you? Emerging use cases for stablecoins, what are you seeing?
Yeah, I find, these days a lot of discussions surrounding crypto pay in and crypto pay out. What that means is that, now as our platform, we could provide a, QR code, work with, a lot of e-commerce platform who can, put their dynamic QR code or static QR code out there, for a lot of different users who don't necessarily need to bank with our crypto exchange. They could use their cold wallet or other crypto exchange, to scan the QR code and make the payment. So what we work with a lot of e-commerce is that they can actually put their products out there globally, collect the payments without the burden of, I don't have the bank account in that particular country. How can I wire the funds back to my own country? So these discussions and this message has been brought up to this different the e-commerce platform to help them build their products and sell out to globally. So that's one big pillar that we have been focusing on. And then once they collect their funds in bulk, we can help them to do the off ramp in a safe and regulated way to back to their own banking, traditional banking. So that's the current situation helps them in terms of fund flow from used to be by a month end, now is every single day that we can do the payments out there. And this is a big use case for a lot of e-commerce companies and for a lot of users who actually don't recognize that QR code back end is actually a crypto. They can just use their own wallet, make their own payments, real physical goods out there in that. And the other, use case which I'll briefly touch on is that we see a lot of cases like a Web2 traditional ones, like a travel agency. What they're telling us, they like our products, as in they can even pay out to their hotels globally. They used to be, I'll say, in Turkey, their Singapore account, hard to send the funds to the Turkey hotels just because, when users are booking the hotels in Turkey, they need to make a payments out there. Now that, both sides are connected with the crypto side, actually funds flow comes very instantly, and they are also saying that now I should putting this out there even to the drivers or even to the tour guide who are receiving the tips. They can put out there the QR code and then scan it to collect the stable coins, which a lot of emerging markets tour guide, they may prefer to receive these in stable coins rather than the fiat in their bank account. So that's another use case and very interesting part we have seen the trend.
Thank you. It seems like Gate is actually disrupting markets where I wonder if the traditional global payments businesses that service those e-commerce gateways, for example, if they realise that these global crypto exchanges are essentially coming for their clients.
Yeah.
I wonder if they realise that. But anyway, it's a couple of good use cases there. Thanks for that. Before I go to you, Esme, if any of you watching this online are wondering what that bang sound is, this is an interactive expo, and there is a golf exhibition just on the other side of this wall here, and people are practicing their golf swings. And so it sounds like a loud bang, like just then. It's because it's a very interactive expo. If you haven't been to one of these before, come next year, and if you're in the room today, have a crack and see how you go. Anyway, Esme, over to you. Emerging use cases that you're seeing in the stablecoin space from your perspective.
Right. The first thing, so I echo Edwin when it comes to e-commerce, retail, there's loyalty. So as you see, so PayPal, USD, but that's what's happening right now. And just tying to what's going to happen in the future, right? So given that I come from an investment background, so just want to give you guys some tips. So for example, when we look at like traditional finance prime brokerage. So right now, I think there isn't a stablecoin settlement right now. So I expect that with stablecoin, so a lot of institutional investors can go on ramp. That opens up a new kaleidoscope or permutation of a number of different investment options. So for example, the Riley talked about RWA stablecoin as an on ramp option, and then there's also a stablecoin converting to other digital assets and staking into to get different yields. And obviously, as Kailash mentioned, so there's also corporate treasury management apart from the payments function. So there's also investment to diversify your balance sheet exposure as well, which is a lot of what digital assets treasury companies are doing. So I think these two would be, or these three will be the key use cases. I also want to leave all of you a note, and that is regarding to why stable coins will be very important when it comes to use cases. So for example, I'm sure all of you have heard of the Gartner disruptive function. So this Gartner's disruptive matrix is that where there's the slope of disillusionment and then there's the slope of the enlightenment, right? So I believe that the reason why I'm very bullish in stablecoins is that we're heading up the slope of enlightenment, and therefore I imagine that what all of our panelists have mentioned are just very limited use cases, and I expect in the next 12 to 24 months, basically this industry is going to mushroom as a lot of traditional investors, regulatory bodies, and also public-private sector all push a lot of liquidity into this sector.
Yeah, that's a really good way of looking at it. It's a little bit like AI. The more time you spend with it, the more understanding you get of use cases that you couldn't have possibly imagined before you started to have those conversations. So hopefully this conversation that we're having now can help spark some ideas on that slope of enlightenment. And we'll do some crystal ball gazing to finish this off in about 15 minutes, but we're over the halfway mark now. We've talked about the opportunity, we've talked about the use cases, and now I'd like to talk about something that's very close to my heart as a financial services regulatory lawyer, and that is regulation, because Esme, as you made the point before, one of the first things you said was what a country allows will impact the degree of opportunity in that place. Now, in Australia, a lot of our clients, many of whom are global and some are Australian natives, are all investing in the US. They see this as a window of opportunity. They see it as a time horizon, as it having a time horizon. It's open and it's going to close. Let's make hay while the sun shines, right? So there's this regulatory liberty in the US at the moment. We've got Europe that has a more, probably they were the leaders in terms of regulating digital assets, I think. They weren't first, but they were obviously the first big one. And so we've got regulation popping up everywhere. I think the Financial Stability Board, one of the global standard setters, pointed out there's about half a dozen frameworks that have been established and about 8 or 9 that are in the process of being established. Like Australia, draft legislation has just come out. So as regulation gets clear in a country, then the institutional uptake also increases, and that provides an economic opportunity for that country. And governments are finally realising that. I do a lot of policy work. Esme, I'd like to hear about some of the things that you're doing in a second. But so the other thing that governments are trying to coordinate is they're trying to avoid regulatory arbitrage. And that is where it's easier to go into that jurisdiction, so we're going to go there first. But they can't stop it if they don't do anything about it. So right now, if you look at where, tokenized gold, where the head office of Tether is for its tokenized gold product, it's some random jurisdiction that you might not know much about, right? That's how this industry has emerged, and it's all going to change over the next few years. So we need to understand regulation if we are going to understand the opportunity and follow and even lead into the opportunity. So Esme, given your background, I know your business is also consulting to regulators. What do you think are the regulatory barriers to this opportunity presenting itself more fully?
Yeah, I would say that in one word, it's a lot of fragmentation. So, for example, as you rightly pointed out, there's room for regulatory arbitrage. So right now, many different regulators, they have put up their own rules. But however, there is no unified standard. And as a result, I can give you an example. So when one of our clients, because we usually work with our clients at a very early stage in their life cycle, so even before their blockchain goes public, that's where they already approach us. And one example is if they want to get a stable coin, they will ask us to assess what is the way to get it in the least frictionless manner, in the least time, least cost, and least capital lockup. And we will need to go through all the analysis for different jurisdictions, including the UAE, in East Asia, in Hong Kong, and US, and also in MiCA. So that's one thing that, given that we have live requests for us to do this, and we basically recycle and send it to different clients when they come to us for this. So it just means that many of the players are pragmatically thinking about doing this.
Yeah, that's a really good point. The cost of being first mover is expensive, but then you're first mover, right? And then everyone that comes after. Yeah.
And basically, it's really important to filter what is cosmetic, what's a cosmetic PR, to let people think that your jurisdiction is, doing something great and innovative in digital finance when maybe the regular economy is basically in the doldrums, right? So you need to filter through that because a lot of companies in the blockchain ecosystem are basically startups, right? Bitcoin was just, in 2012, and therefore I think a lot of companies, even the payment companies or the exchanges or even companies like ourselves. So we cannot afford burning through cash when regulators are dragging their feet. And therefore, it's very important for there to be regulatory clarity and also a means of passporting. For example, if I get one license in, say, like a U.S. under Genius Act later on, or in Hong Kong under the Stable Ordinance, and I can passport it to different jurisdictions, that would be the perfect means to reduce the cost of market access.
Yeah, if any regulators, if any lawmakers are watching this or in the room, passporting, please. Harmonisation, they're very difficult things to achieve, but they're wonderful things. Okay, Edwin, big global exchange by its very nature, decentralised finance is not bound to a jurisdiction, but we have to deal with regulators. So what's your experience? Yeah, what are the barriers?
So I think the fragmentation is not just about stable coins, but entirely, even us as a crypto exchange, we apply for different licenses in different, different jurisdictions. We also see the pain points, about every regulator body is trying to regulate that certain jurisdiction. Even I personally, I grew up in Hong Kong. There was a time I was, responsible for the Hong Kong local exchange, but we pulled out, together with other global players, and then we moved to Dubai, set up the Vera license, the exchange out there, which is now up and running. So that's actually one of the different regulatory body have different line of standard. This is people are there, travel around and do business globally. So that's actually not just stable coins, but even crypto exchange or crypto players, centralized exchange are doing the same. For us, looking ahead, how to handle this is that I think what we somehow see we understand why regulator is doing that, because when we applied for the MiCA, in EU is already passporting within the EU region, but that's actually a lot of crypto exchange are going to one certain area which has a relatively lower bar, just to get the MiCA, up out there. So there creates a lot of challenges, a lot of noises out there just within the EU. So thinking across the countries, that might give another level of difficulties, which we do understand. So what we can do, essentially is that we just need to make sure different jurisdictions, different regulators, we have, personal touch, and we, get our names out there, be proactive to, work with them and let them understand why, why we are relevant in that jurisdiction and how we can, ensure our assets are safe kept in that local jurisdiction. At the end of the day, it's about, the user protection, client investor protection, this kind of stuff to make sure the country is being protected.
Edwin, are you having governments and regulators come to you saying you should be regulated like a markets license regulation approach?
Well, a lot of different jurisdictions, they will first come for the global names, to work with us to understand, whether that fits. I'm sure stable coins as well, the major stable coins will be invited, to be part of their, stable coins legislation or regime. So similarly, exchange are also having the same of chance to speak to the regulator.
Yeah, okay, so you've got the stable coins coming, you've got different people approaching you because you're larger. I guess what I'm seeing play out is you've got making a market, which, you're sitting in the middle, it's over the counter.
For sure.
And then you've got central limit order book platforms, and they're normally regulated by traditional markets licensees, regulators like stock exchanges. Are you getting told in certain countries you need to be regulated like a stock exchange?
Oh, for sure. If you want a lot of countries or locations, even say Hong Kong, if you don't get regulated in Hong Kong for a crypto exchange, you couldn't be operating here in Hong Kong. Similarly for other jurisdictions, it's the same.
Yeah, I'm seeing a lot of pushback from the crypto exchanges saying, don't treat us like a stock exchange, give us a new type of regime because it doesn't work, right? It doesn't work, or it does work?
Well, we work with regulators again, so just make sure, we fulfill the standard, and then, to market out there in that region. Otherwise, we will be not operating in that region
So
without the license.
You do what you have to do.
Yeah.
Yep. Okay. Kalesh, how about you? Regulatory barriers. So by its very nature, payments is cross-border. You need to comply with the law in both sides of that corridor to make it work. What's your experience? What are the regulatory barriers right now?
Yeah, I think the biggest barrier to scale is ensuring we have regulatory clarity across all jurisdictions that we operate in, right? Like if you look at stablecoins as a store of value, it's inherently global. Like if I have USDT or USDC with me, I can technically use it wherever I want. But on the merchant side, accepting stablecoin is not inherently global. And that's because of different regulatory frameworks in different countries. So as the panelists mentioned, I think being able to passport a regulation or framework that you have would help a lot in driving adoption to make the store of value and the transfer of value very equivalent. I think that's the key thing that we need to work towards. For us, we are licensed in Singapore. We're licensed in Europe, we're licensed in the US. But the reality is a lot of global businesses who are from countries that we may not be licensed in, still feel a little nervous to use our platform because we may not have that country's licensing framework. And I think that's the bit that needs to change. For us to be able to drive adoption, I think that the passporting and having regulatory clarity is extremely, extremely important.
Yeah, I'd agree with that. And it's challenging because the traditional banking sector also requires a certain level of regulatory compliance, obviously, to enable access to their fiat rails, right? So that's a challenge too.
Exactly. And on the topic of fiat rails, I think access to bank accounts is also a little understated and not spoken as much. I think providers where incoming or outgoing is crypto and getting access to bank accounts for those fiat flows, that needs to improve as well. It's not as easy as I'm a traditional business, I go and open a bank account today and I get that approved in 2 weeks, right? Like you need to go through a lot more due diligence, a lot more paperwork, just because that regulatory clarity is missing. So if bank accounts become mainstream, if providers are able to support a lot of these flows more seamlessly, I think that's going to drive adoption and transfer of value of stablecoins.
Yeah, thanks for that. Yeah, it's interesting what some of you have said about there's this fragmentation. We want more regulatory clarity. And I see each country rolling out its own regime and they do not copy each other. They want to do it themselves. So you've got an e-money token or a token with a reference function in one country, and then you've got a virtual asset or qualified virtual asset coming out of the UK. And in Australia, we thought, let's be really plain English. Let's call it an interest in a tokenized stored value facility. We won't call it a stablecoin because we want to be technology neutral here, right? An interest in a tokenized stored value facility. That is what Treasury is proposing. The reality is, if it's a good framework, it's going to work. So I shouldn't get caught up on the lexicon, but it is not. No country is really trying to harmonise. I remember talking. I was at an FSB working group in Tokyo 18 months ago, and I asked one of the countries that was just bringing out legislation, how come you chose the phrase crypto asset? And they said, that's just what we did last time, right? So we've got 3 standard setters, the FATF, IOSCO and the FSB. They're all using different language, virtual assets for AML CTF, crypto assets for IOSCO, digital assets and crypto assets for FSB, and everyone's going their own way. So anyway, I don't think that's going to change. But just to finish off, why don't we just crystal ball gaze for a moment? You're all deeply embedded in your industries. You're spending your time really analysing the trends. Let's fast forward 5 years, which is like 100 years in stablecoin world language. 5 years, what does your world look like? So we've got 2 minutes, so 45 seconds each. What does the world look like in 5 years, Esme?
I would say network effect to fully kick in, and if I were to put a number around it, so I would expect 70% of institutional global stablecoin liquidity to be driven by installs. So right now it's about 5%.
Wow.
So 5 to 70% in 5 years.
Yeah. Okay, thank you. That was short, to the point. Thank you.
I'll make it short. So I think in 5 years' time, we don't even need to talk about stablecoin. The reason is because we do transfer, we don't talk, hey, let's do a digital payment. We don't talk about this, word. I'll just make it, I think, later on, we'll just very, deep in our heart, when we make payments, that actually at the back, it will be blockchain backed, which is stable coins. And also, if you ask me whether, whether we need that many stable coins. Everyone wants to make a stable coins. Maybe in 5 years' time, there will be some consolidation happen, and then to boost up some of the key ones that have a lot of applications.
Can I add one point? So I expect there to be a battle royale of stable coins. So
Yeah.
that's exactly what he mentioned. So only one or two is going to dominate globally.
Yeah, I think that's a really good point because countries are realizing with the rise of Circle and Tether, the impact that a foreign stablecoin will have on their jurisdiction. So I think in addition to that battle, there'll be a regulatory battle, but from countries sort of trying to restrict certain levels of circulation once they realise the impact it's having on their local economy. So add to what you just
So
said.
it will be battle, and it will be also a breach. To make it some stable coins are breaching together. Impact.
Okay.
Yeah, I
thank
think
you.
the issuers will do all it takes to protect their yield, right? I think that's what's going to happen. And with CBDCs coming up, you never really know how the issuing market will play out. So my crystal ball moment is more focused on the C2B side. I would imagine making payments with stablecoins would be as seamless as how one would make payments with cards today, right? To be honest, the form factor for you to transact with stablecoins today is not great. You need a QR code, you need to open something else, you need to scan something, then the transaction gets through, then there's a confirmation. Compare that to Apple Pay where you just tap and you're done. I think the form factor is going to be redefined and it's as easy to transact with stablecoins as you would do with cards today, and it becomes mainstream.
Thank you. So to echo what Esme said at the start, where is the next round of alpha? It's here. Where is the future? The future is mass adoption, and there's opportunity everywhere. So each of these panelists are hanging around for a little bit if any of you want to speak to them. I'd like to thank you all for watching and listening. Let's give them a round of applause. Thanks.
Thanks for being a great audience.